Hi, everybody. Welcome to Friday's Focus on Finances. My name is Jamie Fleming, and today we're going to talk about 6 year-end tax planning moves for small business owners. So, while the tax season for 2022 may be months away, New Year's Eve will be here before you know it. The fourth quarter is the time for some proactive tax planning to lower your 2021 tax bill. And for small business owners, tax planning shouldn't be a once a year exercise when filing your taxes. With extensions, you may be able to delay filing your 2021 taxes until late 2022. However, many tax planning moves that can help lower your taxes owed may need to be done before the end of the current year. So pay attention to those things. One of the things that you can do now is review how your business is set up. What is the corporate structure of your business? Are you a sole proprietor, S Corp, LLC, partnership, or C Corp? As your business and income grows, the best structure for your business may change. This is something you should review with your CPA and certified financial planner every few years, and even more often if your business is growing rapidly or if there have been changes to the ownership. You want to review your business retirement plan. One of the best ways for small business owners to slash their taxes is to establish a retirement plan. This could be anything from a SEP IRA to a solo 401k, all the way up to the combination of a 401k with a defined benefit pension plan, like we discussed in detail last week. Would you rather write a big check to the IRS or to your own retirement account? The choice is obvious to me. In case you're wondering, high income small businesses can potentially defer income taxes on over hundreds of thousands of dollars per year. Went through some of those calculations with you last week. So here are a few of the most common retirement plans for high income small business owners. First, most of us have heard of the SEP IRA. If you are self-employed, you can contribute 20% of your net self-employment earnings into the SEP IRA per year with a maximum contribution of $58,000 for 2021, or 25% of compensation, still with a $58,000 maximum contribution, depending on your structure and on your business structure and how you pay yourself. There are no catch-up contributions for SEP IRAs. With no year-end deadline, though, a SEP IRA can be set up just before filing your taxes for the previous year. I do want to caution you, though, this means coming up with large sums of monies all at once, including probably a tax liability as well. So as I've stated many, many times, my business clients in which we plan throughout the year end up contributing significantly more when they're contributing throughout the year, and then being able to catch up whatever's left when they're preparing their taxes. So doing this sooner than later will, in the long run, allow you to potentially put more money away, not having to come up with lump sums all at once. Another common retirement plan for small business owners is the solo 401k. Typically, a solo 401k will allow for the largest employee tax contributions, which should translate into fewer taxes being owed. Now, remember, the solo 401k are for business owners with no employees. So you are the employee and the employer. Business employees are allowed to contribute up to $19,500 for 2021, plus a $6,500 catch-up provision if you're at least 50 years old. Additionally, the business will be able to make a profit-sharing contribution up to 25% of payroll. That means a grand total of $58,000 or $64,500 for those over age 50. This could be saved provided the individual contributions contributes the maximum amount allowed by the IRS. That's the $19,500 for 2021. And the business contributed the maximum allowable for payroll. That's a pretty hefty amount, $58,000 or $64,500 if you're over 50. You could also benefit from a Roth solo 401k. For the employee portion of your contributions, it's the same as the 401k, $19,500 plus a $6,500 catch-up contribution for business owners over the age 50. If your spouse also works with you in the business, he or she can be included in this plan as well, essentially doubling the amount you can contribute and the tax savings. So last week we talked about the defined benefit pension plan. For those needing huge tax savings, the defined benefit pension plan is king. Combine it with the 401k profit sharing plan, your business can sock away a few $100,000 per year. You may also hear this called a cash balance plan. Defined benefit pension plans are the most complicated of the small business retirement plans to set up because the plan design is complex and time consuming. If you think this may help your business keep more of its hard-earned money, then you should talk to your trusted fiduciary financial planner ASAP. And if you don't have one, set up a time for a complimentary consultation to see what your contribution could be. The extra work is more than worth it for high-income small business owners willing and able to max out contributions to their 401k and defined benefit plans. Contribution limits will depend on age and income, but they can often run north of $150,000 per business owner per year. The tax savings can be huge, especially for those in high tax states like California and New York. Next thing you want to look at is, are you eligible for the home office deduction? During the COVID pandemic, more and more small business owners have begun work from home full-time. Business owners reading this who work from home may be eligible to take advantage of the home office deduction. So you also want to check with your CPA or fiduciary financial advisor to determine your eligibility. The valuable tax break can save hundreds or thousands of dollars in taxes each year. And the best part is that you're already incurring these expenses for housing regardless of your business use. Take the time and discuss the home office deduction with your tax preparer to be sure you qualify. The next thing is, don't ignore your bookkeeping. Filing taxes are a stressful process for even the most organized business owners. Please don't try and file your taxes from a shoebox full of receipts. Break up your accounting and bookkeeping throughout the year. This can be easily done with software like QuickBooks or other software programs out there. For a more complicated business with many invoices and expenses, consider hiring a bookkeeper. At a bare minimum, avoid procrastinating until tax time to get your books in order. Missed tax deductions increase your taxable income and are essentially like throwing money away. If you have a complex business, or if you just don't have time to get your books in order, it will well worth hiring a bookkeeper to help you with this, and it'll free up more time for you to spend on revenue generating activities. The next thing to look at is claim first year bonus depreciation. One of the positive changes from the Tax Cuts and Jobs Acts is that you can now deduct 100% first year bonus depreciation for qualified used and new property that was acquired and placed in service during your 2021 business year. To put this more plainly, you may be able to get a tax break for the entire cost of assets purchased in 2021. If you're having a big income year, you may want to consider moving up some plan purchases into 2021 to take advantage of this deduction. Next thing is, be proactive in tax planning for potential 2022 tax changes. When planning for 2021 and 2022, there are proposals from the Biden administration to increase taxes on those making more than $400,000 per year as a single filer and $450,000 for those who are married filing jointly. Many business owners find themselves with incomes above these levels. While you shouldn't make major tax planning decisions based on government proposals, you should be prepared for potential changes to the taxation of your income. The higher your tax bracket, the more valuable tax planning will be for you and your business. Even without any changes to the tax law by the Biden administration, many of the current changes from the TCJA, which is the current Trump tax plan, are only expected to last through 2025. As a business owners, it's well worth the time and money to do regular strategic tax planning before it's time to prepare your taxes. If you would like to see how these strategies might work for you, please take advantage of our complimentary consultation. We would love to help you achieve your financial goals, both for your business and for your personal wealth. I hope this was helpful. Please take some proactive steps to lower your tax liability and increase your personal wealth. Hope you have a great weekend, and we will see you next week on Friday's Focus on Finances. Thanks, everyone.